like to introduce our panel. We're going to focus in now on the regulation of electricity markets as opposed to the broader theme that we discussed in the previous panel. Our first speaker is Dr. Emmanuel Ezekwere from the Nigeria Electricity Regulatory Commission. Then we'll be speaking Dr. Joyce Shingle-Wigwe, I hope I'm pronouncing it correctly, who is the former legal advisor to the Minister of Power in Nigeria. After that, we'll have Scott Stoll, who's my partner at Berlis, who focuses on energy regulatory matters. And then Mr. Rob Schumann, who's the project manager for Manitoba Hydro International, and I believe he works in Nigeria for the Nigeria Transmission Company. So let's start things off with Dr. Is it Dr. or Mr.? I'll say Dr. Engineer. Oh, sorry, Engineer Ezekwere. Please welcome him.
All protocols observed. My name is Emmanuel Ezekwere. I'm standing in for the chairman of Nigerian Electricity Regulatory Commission. Unfortunately, he's not able to make it to this occasion. He had to be called away, and it wasn't possible for him to be here. But he sends his felicitations to everybody, the Canadians, and also the fellow Nigerians that are here. We are desirous to see that we have investments in the power sector in Nigeria. And what readily comes to mind to the investor are some basic things is the frameworks there, the legal framework, the institutional framework, and the regulatory framework. Am I going to get my money back if I invest? Am I going to have a level playing field? What are the impediments, and are there mitigating measures put in place for cost recovery? These are my slides, if I could have them. Okay. Now, the first slide, please. Okay, that's the outline. We're going to talk about licensing, the market regulation as a balancing act. We're going to look at market development and the extent of price regulation, the multi-year tariff order. If time permits, I would like to look at a bit deeper into that to give you the assurance that actually there are measures in place to make sure the investor recovers his money. Then we're also looking at electricity metering capacity issues. And finally, we conclude. Okay. Now, there's a legal framework for the power sector in Nigeria. We have the EPSR Act of 2005, which ensures that licensing is done for all operators, generation, transmission, distribution, system operations, and also trading. And according to the Act, these activities are subject to tariff regulation. The multi-year tariff order is the vehicle that actually puts in place the cost recovery mechanism for all prudent costs. And the metering code is also there in place to make sure that the electricity is measured accurately. Now, the licensing in the regulatory landscape is the mechanism by which we were able to bring in all operators into the power sector. The interested party decides on what he has to do, and he decides on which area he wants to invest in. So he completes an application form with the commission, and is required to also go and publish this publish a notice in the public newspapers and brings a copy to the commission. The Commission considers the information and decides whether the application is of merit or not. And if it is of merit, of course, it's approved. But if it is not, it is turned down, but it's subject to appeal. And the beauty about this process is that the Act requires that this process must end within 6 months. So by law, the Commission is constrained to reject or accept an application and issue a license within 6 months. And of course, the Commission can be sued, and the Commission can also sue. Now, market regulation is basically a balancing act. You know, the regulator is always accused, either by the investor or the operator, actually, that, you know, they are siding too much the customer, you know, and the customer always accuses the regulator of being too lenient to the investor. So, but the consumer has some rights which must be protected, and the Act requires that the Commission protects those rights. The right to safe and reliable electricity supply, accurate and transparent billing, prompt investigation of complaints, and the right to be informed and to be heard and to seek redress. And of course, the investor has some rights, which the Commission also protects. The right to recover full efficient costs, right to financial viability, right to a reasonable return on investment, and right of open access to the national grid. These rights are all recognized by the Commission and are actually entrenched in our regulations. Now, the market in Nigeria is going through some phases, some stages. The initial stage is where we are now. We're about to transit into what is called the transitional market stage. But right now, we're in the pre-transitional stage. We finished with the unbundling of the vertically integrated power sector, and we're on the verge of actually privatizing these companies. In the initial transitional stage, where we are now, the generation, transmission, distribution, and retailing are all under price regulation. But going further, you know, we are going to have more of bilateral contracts between parties. And in the long term, generation will be totally deregulated. But transmission will still remain under government control. As of now, it is under management. And we are happy to have Manitoba Hydro as the entity from Canada managing our transmission entity. But the distribution will be fully privatized with natural monopoly in some territories where they control. And generation will be totally deregulated in the long term. So that's where the market is going. We don't have enough time to go into all the nitty-gritty of the market development. But I would like to go into the multi-year tariff order, which determines the tariff or the pricing in the market. The MITO is the methodology that establishes the electricity tariffs paid to electricity consumers, and consumers are expected to pay all efficient and prudent costs for providing electricity. So all costs are passed through, provided they are prudent. So that requires that the investor is to open his books. Now, the major review of the tariff takes place every 5 years. But there are short-term or minor reviews every 6 months. Now, the decision or the order of the Commission is what propels the MITO. Now, the MITO sets tariff for the 3 electricity sectors based on certain principles and assumptions, cost recovery, signals for investment, and so on and so forth. I'll quickly go forward because I don't have much time. There's a mix. What we have, the tariff system we have is a hybrid. We have price cap regulation, we have incentive-based regulation, all mixed up together. But like I said earlier on, it's all passed through to the consumer. So basically, that's the basis on which the tariff is based on. We have what we call the 3 building blocks: the OPEX, the capital costs, and depreciation, which are the three building blocks under which the tariff is developed. Of course, the regulator is paid these charges, and there are also charges for auxiliaries. Now, those are the three building blocks for generation, transmission, distribution, all coming together with certain assumptions for capacity, fuel costs, investments, and so on and so forth. Now, with the private sector coming in, we are going to have some of these things reviewed because they are going to do due diligence, so it's still subject to adjustments. So these are the building blocks: return on capital, return of capital, which of course is depreciation, and the operating costs, OPEX. And typically that's what the revenue requirement table is like for generation, for transmission, discos, based on those foundational building blocks. Now, these are some of the key financial assumptions. Time will not permit, but they're all there in the paper. Later you can look at them in details. But these are the key assumptions, and they have been revised in 2012. Initially, we had those older assumptions. These are projections for generation. There are rationale for price review, which time wouldn't permit me to go into. Now, these are the nominal wholesale tariffs for generation. Is based on OCGT technology. That's for fossil fuel, gas fuel generators. Then we also have developed recently for coal, for large hydro, for small hydro, wind, and it must interest the last speaker on solar too, and then biomass. It's a Naira per megawatt hour. Now, these are the tariff classes we have, at the retail end. R stands for residential, C is for commercial, D is for industrial. Now, here's a typical disco. These are actual charges that are being in place now that are being implemented by the order of the Commission. That's the fixed charge. It's a two-part tariff. First part is fixed charge, and the other one is energy charge. And this is for Abuja Disco, one of the 11 distribution companies in Nigeria. Now, on electricity metering, it's important that the tariff, is only based on energy that can be measured. If there's no measure, that means the power sector cannot be liquid. So only 40% of the country's population has access to electricity. 40% of about 160 million people. And the total customer figure is about 5 million. There's a very wide metering gap, which investors can capitalize on. And we have all sorts of meters, electromechanical, electronic, prepaid meters, and lately smart meters in our system. So we encourage smart metering because we believe there are key drivers in the power sector that will require smart metering solutions. Some of the problems associated with metering in Nigeria include bypassing of meters, inadequate funding, and so on and so forth. Now, the smart metering is driven by these factors, which I believe you can look at and find why we actually need smart metering in Nigeria. Okay. Now, in conclusion, what the investor needs is regulatory certainty. And I can assure you that the commission, that's Nigerian Electricity Regulatory Commission, is made up of commissioners and a chairman, and nobody can remove them except they go through the due process. They must go through the Senate to be removed, and that's for gross misconduct, not just for any reason. So they are totally shielded from political influence. Or the others are totally independent. They are not driven by government or anybody. So they are independent. So you can be assured that with such a regulator, you are in good hands. The licensing process is fair and transparent. And like I mentioned before, you get your license within 6 months. after submitting your application, as long as you satisfy all the requirements. Now, there are mitigation for all systematic and unsystematic risks. We are always on the lookout to uncover any risks and make sure we take mitigation measures. All prudent costs are recovered, like I mentioned before, and the return on investments, I couldn't go into that in detail earlier because they're all contained in what I skipped. But there's substantial real after-tax return. There's nominal weighted average cost of capital of about 25%. There's allowance for adjustment for nominal WACC due to inflation and other identifiable risks. All operation and maintenance costs are adjusted, with inflation. Now, the contracts are take or pay, which means if the IPP declares the capacity, it has to be paid for that capacity, whether you took it or not. And yes, there's 100% exchange rate mitigation. As long as there's a certain change within 5%, there's that mitigation kicks in, and it's contained in the body of this presentation. Also, there's a bankable PPA arrangement, as the Honorable Minister has mentioned, with any EBT in charge. And there's a World Bank partial risk guarantee for some selected IPPs. Now, codes and regulations are in place to make sure that there's level playing ground. And as I mentioned earlier, smart metering is encouraged, and we need our Canadian friends to come into that area. There's a huge opportunity for investment in the power sector. Right now, the supply is about 4,000 megawatts, and it's projected to grow to about 250,000 megawatts by the year 2030, given all the infrastructural developments that will be put in place. Thank you very much.